Good morning, everyone. Welcome to Prebell with William O'Neill India. My name is Rajshekar Kongari, Equity Research Analyst, part of Marcus Smith India team. Before we go ahead into this podcast, the disclaimer is registration granted by SEBI, membership of BASL, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. With this disclaimer, let's move on to the main part of the podcast by analyzing Nifty's daily chart taken from our website. For the last 4 to 5 trading sessions, Nifty has been closing in the negative territory. As you can see here, it peaked around 24,700, 800 levels. And from there, it has uh, coming down in the last 5 trading sessions. Nifty closed lower. In the process, it retraced towards its 21 DMA as well, which is a green line here, a short-term moving average, which we track, has been tested and looks like it is going to give support for the Nifty. However, if that index is breached on higher volumes, the volumes have also been on the higher side, which is a slightly cautious sign. When the Nifty was advancing higher, the volume was on the lower side, but whereas whenever it is falling off or whenever it has come under profit booking, the volume has increased, which is a slight sign of concern. And if it breaches 21 DMA and higher volume, the next support is at 50 DMA, which is another 500 to 600 points from here. So the major support is long back, is going to be a very big breakdown in the index level as well. By the time if there is an accumulation of distribution days in this process and Nifty breaches 50 DMA, we will change the market status to under pressure. Currently, distribution day count is at 2. We have seen the Nifty falling more than 0.2% in the previous session, that is on Wednesday, but the volume was on the lower side. That is the reason we have not considered it as a distribution day. But if the distribution day count elevates to 4 or 5, and if the Nifty 50 DMA is breached, we would change the market status to under pressure. In such a scenario, our exposure towards the market we try to minimize, and also new additions to the portfolio will be very strict while taking the calls. Our cautiousness towards the market will increase, and the probability of breakouts will also be on the lower side when our market status is changed. Currently, we are still in confirmed uptrend. We will continue to stay in confirmed uptrend as long as the Nifty stays above 50 DMA. Earnings season is continuing, and some of the IT companies have reported their numbers. Tech Mahindra is a new company which has reported earnings for the June quarter. It has reported earnings on the yesterday itself, and the earnings have come in line with the consensus estimates, which is a good sign. Revenue has increased 10% sequentially to 13,000 crores of rupees. Profit on the other side has seen an improvement of almost 30% sequential growth to 851 crores of rupees. EBIT margin, which is a key parameter in the IT stocks, has improved 110 basis points to 8.5 in the June quarter. DLF, a major realty developer in the country, has also come up with their numbers. It has reported very good set of numbers. Revenue for the quarter has grown 14% to 1,700 crores of rupees. Profit on the other side has seen a growth of 23% to 646 crores of rupees. During the quarter, the company has seen a new sales booking of its flats, has seen a growth of 214% to 6,000 crores of rupees, which is a very positive sign. On one side, there have been news articles regarding flats not being occupied by the investors. But if you look at the numbers from DLF and other major developers, the numbers are very good, and they are seeing 100% of their flats being booked. Ashok Leyland has also come up with their numbers. Major automobile manufacturer has given very good set of numbers. The numbers have come above the consensus estimates. Revenue was up 5% to 8,600 crores of rupees. On the profit front, the company has seen a slight decline of 8.7% to 526 crores of rupees. In the today's session, we are expecting to see companies such as Bandhan Bank, Cipla, City Union Bank, HT Media, Case International, KFin Technologies, IndusInd Bank, Interglobe Aviation are some of the companies which will be reporting their numbers. There are other small and mid cap spaces also coming up with their numbers. If you have any of these stocks in your portfolio, please be watchful because whenever the earnings are reported, you will see volatile action either on the upside or on the downside. Coming to the yesterday's institutional activity, FIIs, that is foreign institutional investors, were net sellers. They have sold more than 2,600 crores of rupees of Indian equities, whereas the domestic institutional investors have given good support for the markets. They have bought more than 2,400 crores of Indian equities. Talking about global market update, overnight US market closed mixed. You can see Dow Jones closed on the positive territory, whereas S&P and Nasdaq closed with a negative territory of a decline of around 0.5 to 0.9%. Asian markets are also trading mixed. Kospi and Nikkei are trading in the positive territory, whereas Shanghai Composite is trading with a decline of almost 0.4%. SGX Nifty is also indicating a muted opening for the Indian market. Yesterday, market closed around 24,400 level, about 400. So we might see a opening around similar levels. And if the Nifty holds 21 DMA, is going to be very crucial. As also this is the weekend, more news pointers will come in during the weekend. The budget has also been announced. So major macroeconomic news has been behind us. So going forward, earnings are going to dictate the market status going forward. For the chart of the day, we picked ICICI Securities. Currently, it is forming a stage 2 cup with handle. It is trading in a handle portion of the base pattern. The base pattern has been good a couple of times. The volumes have been on the lower side, which is a positive sign. And the handle formation is also good. Volumes have declined during the handle formation, which is a good sign. The stock is still 4% to the pivot. If you look at the ratings, EPS has been very good. That is reflected because of the company's consistent growth in the last 4 to 5 quarters. You can see June quarter earnings have also been come out for the company, and it has reported very good set of growth in terms of sales and profits as well. Price strength has been slightly on the lower side because of company's underperformance. It peaked around almost 860 level around January. From there, it has been underperforming. Whereas the if you look at Nifty mid cap or Nifty 50 index, they have been trading higher. But this stock has moved sideways with a negative bias. So that is the reason of declining in RS. But when the stock breaks out from here, we would see increasing in RS as well. Apart from this, other ratings are looking good. Return on equity especially has been very good. So both fundamental ratings, EPS rating as well as return on equity have been looking very good. Technicals needs to improve for the company. Number of funds section has seen good improvement until March, but June quarter has seen a slight dip in the number of funds invested in the company. That is also slight concern. So that indicates that during this sell-off, some of the funds have exited the company, which is not a positive sign. We would like to see increasing in institutional sponsorship for any company because they have good amount of funds to give support to any stock during turbulent times. Thank you for joining today's pre-bill. Have a good trading session.